and welcome back. I hope you're all having a fantastic weekend. Thank you yet again for the love and support on yesterday's video. I appreciate it all. That being said, there's a ton of news to cover again today. Going to be looking at some more information surrounding Hedera and its future, particularly built off the back of those partnerships we've recently seen as the ecosystem continues to ramp up. I'll also be covering some more news on Luna. As you probably can see on screen now, looking at the crypto bubbles, it's one of the only projects at the moment in the space which is up massively. Just wanted again to reiterate and confirm my thoughts and opinions on this and what I'm effectively doing. As many of you will probably be aware, I am steering clear of this with a 10-foot barge pole, as it is effectively in meme coin territory, and it's only just further solidified that with recent circulating supply increases. That being said, across the board, we can see majority of the crypto projects are down again. As I mentioned, that kind of small relief bounce we saw yesterday slash the sort of day before wasn't a dead cat bounce, so to speak. However, I did say there was a potential further leg towards the downside. Obviously, I'm continuing to average those positions. Hbar is on an absolute fire sale at the moment, and we still have so many great things to come out of this market, particularly over the next sort of 6 months or so. That being said, I also wanted to quickly cover this CBTC, the Cosmos Purpose Bitcoin Access ETF. This was that ETF that launched over on the Australian exchanges, which I was telling you guys about previously. Obviously, it's launched with some very volatile market conditions, and this effectively has obviously driven a lower volume than they would have expected immediately. So 21 shares of the EBTC and ETH have seen 125,000 and 140,000 shares trade hands on the day it launched, effectively a volume of around 1 million. So we can see they are estimating around 1 billion worth of inflows moving forward. Obviously, that's an awful lot of capital to flow into the markets. This ETF is actually then sort of holding as well part of this Purpose Investments ETF, which is also a Bitcoin backed one. And you can see here they're already holding 36,500 Bitcoins. If we look at the overview, if you were to buy this ETF on an equities exchange, you can see your Bitcoin per share effectively. So for each share of this ETF that you hold, you effectively own 0.00014711 Bitcoin. And then you've got the net asset value and stuff like that. The sort of too long didn't read of this is still incredibly bullish for the cryptocurrency markets in general, and it obviously adds to that exposure for traditional investors into the world of crypto. That being said, like I mentioned at the beginning of the video, Hbar at the moment is obviously down again slightly, roughly 8% down on the day. Obviously did have that slight relief rally, so we're not quite in those channel lows that we saw days previous. Well done to any of those that managed to actually pick up some Hbar around that sort of 7 to 8 cent level. It did actually dip slightly lower than that on some exchanges. I think it could be had for around 6.5 cents at some point. So a fantastic buying opportunity that was. I did manage to get some in around here, this sort of 8.5 cent range, and I'll be looking to do another buy order either today or tomorrow, depending on where the price continues to move. I'm fully invested in the Hedera ecosystem. Much more so than the beginning of this year. Obviously, as it's gone through fire sale after fire sale, it's almost a complete no-brainer for me personally to continue averaging into that position. That being said as well, we can see the price performance overall for April was 40% down, obviously across the year as well, down big. That being said, one of my plans for Hbar continues to be stack as much of it as I can, and then I will sort of diversify that itself within the Hedera ecosystem. As I mentioned previously, some of these projects that are being built on top of the Hedera ecosystem naturally will probably have greater potential to the upside than the Hbar token over the short term. Now, of course, a great strategy is still to hold Hbar over a long period of time, and that's what I will be doing. For sort of model or theoretical sake, let's say I'm going to hold 50% of my Hbar as raw Hbar tokens, and the remaining 50% of that Hbar I will be spreading out into different projects across the ecosystem. Many of you would have already seen that if you've watched my previous videos, purchasing things like SourceSwap, utility NFTs, Dead Pixels NFTs, to try and jump into that project and support it. We've also got the HStart token for the Hedera Starter IDO, which will be going live on the 19th, so literally in the next 5 days. We've got 𝗟𝗜𝗡𝗞𝗦 as well, which some of you may have picked up. Hbar. You've got the 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 tokens. We've obviously got 𝗏𝗏 as well, JAM. There are so many different tokens already on the Hedera ecosystem, and that's only going to continue to grow, especially as the DeFi ecosystem really starts to take form. And we are very close, right? So the DEXs, as I mentioned previously, are probably within a couple of weeks away. Still looking to see if we're going to see an announcement out of 𝗟𝗜𝗡𝗞 and of course SaucerSwap as well, as those two are really fighting for that prime position. And then not to forget Tangent as well on the sidelines, being incubated by Hedera Starter, still has a lot of potential to launch very soon, particularly because they recently passed those audits. So still a lot to be bullish about. That being said, obviously talking about DeFi in general, a lot of this has been hit pretty hard recently because of the controversy with Luna and UST. Don't forget, Luna was a very big DeFi sort of ecosystem itself. And you can obviously see this if we head over to DeFi Llama. The total value locked figures have absolutely taken a landslide to the downside. We can see roughly, what's that, 70 to 80 billion dollars of total value locked has left the overall markets. And a lot of that's going to be through new fears around a lot of these different chains themselves. So obviously Luna would have triggered a massive portion of this downside that we've seen with capital leaving, but also because of the sell-offs we've had. And then additionally to that, fears on top of the staking protocols not being sustainable. So obviously many fears around whether the APYs you're seeing are sort of legitimate, potentially they're Ponzi schemes. You know, for example, the UST staking of 20%, and it's obviously triggered this calamity that we're currently seeing in the markets. Sort of talking about that, and before I cover this Bitcoin news, I just wanted to bring up Hedera Starter, sorry, not Hedera Starter, I wanted to bring up STADER Labs and just quickly talk about that. Now, for those of you that are actually concerned about your Hbars staked over on STADER-X, i.e. your Hbar-X, fear not. As I've said in previous videos, I believe, and also answer some of your guys' questions in the comments, STADER Hedera is actually segregated from the Luna, the Terra Luna staking mechanisms that STADER offer as products. That also being said, the Hbar rewards, obviously, as stated in many of my previous videos on STADER Hedera, are coming directly from the Hbar Foundation, so there should be no fears about your return or lockup periods changing, etc. for this. This product is built completely via the HCS and HTS services native to Hedera Hashgraph. Hopefully that puts some of your fears at ease regarding that platform. Showing the chart that I had on screen just a second ago, this is a sort of Elliott wave count type of deal for Bitcoin, and is talking about the potential bullish upside momentum for Bitcoin. Now, I will say again what I mentioned in the previous video, and that being that $30,000 not only key resistance level in terms of volume and price action, but it's also a psychological level for the markets, needs to really be maintained. If we do dip below that $30,000 level for a substantial amount of time, there is a real potential for us to fall as low as $23,000 or $24,000 for Bitcoin. That's going to trigger a continuation of sell-offs for altcoins, and we will see projects like Hedera obviously continue to fall as part of that, as capital continues to exit the markets. So just to reiterate what I said in yesterday's video, you know, obviously this is a fantastic buying opportunity. Make sure you have conviction in what you're buying though. We're not out of the gates yet in terms of a resurgence back to normality from what we had seen in previous weeks. We are still effectively in a bear market, and this could still turn for the worse and fall lower. So hopefully that sort of clears some of that up. Now jumping across to Luna from that first sort of few minutes of this video showing the price appreciation of Luna over the past 24 hours. Most of this volume is being driven by KuCoin. I'm over here on KuCoin just looking at the Luna USDT trading pair because they recently reopened trading of this pair. I've never seen an order book move so rapidly. Here on the right hand side, obviously you can see orders being placed for the sell side and buy side in green and red respectively. There is a ton of trading going on here, and as I mentioned previously, I would not touch this with an absolute barge pole. This is effectively a meme coin now with a circulating supply in the trillions. I think the last reported figure I saw is 7 trillion. You'd be foolish to believe that this was going anywhere near $1, let alone back to the $100 it was at one point previously. If I actually flick over, there are several people on Twitter,
I'm sitting here now.
This throughout the sort of Luna hashtag and hashtags. If you go over on Twitter, recovery plan of Do Kwon will reward majorly those that held before Luna crashed. That's complete nonsense. There's no way on earth that's going to majorly reward those that held before Luna crashed. What is happening now is people rushing to FOMO into the dead cat bounce that Luna is having. Everyone is looking for an opportunity to make quick 2x or 3x in this bear market. Be careful. And that's exactly it. This at the moment now realistically is a complete meme coin. That being said as well, there is some news here about crypto.com. For some reason, if any of you did do some trades on crypto.com for Luna back on the 12th, they did say they were going to reverse trades that happened as stuff was quoted at an incorrect price. Chris, the CEO, has then come forward and said they will honor all transactions from the 12th, including those with a price glitch, i.e. there will be no reversals. Very strange to see crypto.com chopping and changing, similar to what we'd seen with their staking rewards for Crow or Kronos on their platform. And this kind of, again, reiterates that point I said before. If you are holding large amounts of crypto on these centralized exchanges, it might be worthwhile moving those from these centralized exchanges onto either hardware wallets or hot wallets on the native ecosystems. Far more secure, because then you are the custodian of that crypto. Non-custodial wallets are the way to go. Let's jump into some Hedera news now, as there's still some very positive stuff that we can cover. BANXA, which I said before in a couple of videos back, is obviously an on-ramping sort of solution for Hedera, helping broader adoption of Web 3.0 ecosystems. BANXA now supports USDC on Hedera, USDC being a stable coin pegged to the dollar, but with actual capital backing it in the form of physical dollars. So there's no fear of a depeg happening with USDC. BANXA and the Hbar Foundation have joined forces to onboard more Web 2 users into the Web 3 ecosystem. Partnership makes BANXA one of the first companies to support USDC on Hedera. That shouldn't be new news to any of you guys. I've covered this on videos previously. Significant opportunities available already for decentralized finance projects in the nascent Web 3 ecosystem. BANXA is thrilled to be the first on-ramp retail platform to enable partners to offer USDC on Hedera, said 𝗥𝗘𝗙𝗘𝗥𝗥𝗙𝗟𝗑, the CEO of BANXA. Backed by the Hbar Foundation, Hedera is a fully open sourced public DLT. Obviously, we already know all of that. What's great to see here is obviously the USDC is a dollar-backed stablecoin asset facilitating access to cryptocurrency trading by bridging TradFi or TradFi, traditional finance, and decentralized finance, DeFi. USDC adoption is largely considered one of the most important steps in building out that DeFi and cryptocurrency ecosystem. 100% agree with that. Now, here is the real kicker here: easy onboarding into the Hedera Web3 ecosystem. To enhance Hedera's growing Web3 environment, it's important to open the ecosystem to Web2 users. That's precisely what this partnership will provide: an easy way to onboard into the Hedera ecosystem by seamlessly purchasing USDC. We are excited for BANXA to enter the Hedera ecosystem to increase support for payment globally and onboard Web2 users into the Web3 ecosystem. BANXA's partners include wallets, dApps, and exchanges. They can now add us to on-ramp their users from fiat to crypto on Hedera using a wide range of global and local payment methods. We are working with leading enterprise-grade public ledgers for the decentralized economy to get our partners first to market with their customers on USDC. We continue to support the crypto ecosystem's expansion and shift in focus towards retail traders. According to the Hbar Foundation, the partnership will also attract more retail and institutional customers to the Hedera network due to the secure, convenient, and fast transactions provided by BANXA. This is fantastic to see. I think I also did see some comments from Hashpack that they will be looking to help facilitate this integration as well. So you should be able to purchase USDC straight via Hashpack, which will be fantastic and seriously allow these DeFi ecosystems to grow exponentially into the future. Moving on to this article, I want to cover it. Danny Eid is obviously a big proponent of Hbar over on Twitter, and he's written this absolutely phenomenal article over on Medium. I'm not going to cover the whole thing as it is seriously long, but has an enormous amount of depth to it and accuracy at the same time. Now, its sort of main mission statement is to compare Avalanche and Hedera's decentralization capability as well as trust of these. And I'm just going to quickly read out these two conclusions. Again, this shouldn't be new news to anyone, but it further cements the fact that Hedera is really doing what's best for networks that are looking to scale. So conclusion one being Avalanche's algorithm protects its network by always making sure they have a high probability of electing the good guys to give you consensus, chosen by staking weight. This assumes perpetual trust in the good guys, of course that being a very weak assumption. The verdict, semi-trustless system and also semi-decentralized, so that's Avalanche. Conclusion two for Hedera, Hedera's project protects its network by preventing anyone, be it good or bad, from acquiring 1/3 of its total coins. It makes no assumption of who's good or bad. No single minority can be in control and everyone weighs in. The verdict obviously being a trustless system which is highly decentralized. Now, I've made these arguments previously in some videos. This article goes into some serious depth, which backs them up with robust facts and figures from the algorithms themselves. As he says here, it could go on and on, but that's enough comparisons for one article. Conclusion to be drawn here is the fact that most people don't really understand the true meaning of decentralization when it relates to blockchains and the purpose decentralization is aiming to achieve. These are points I've made before, guys, in videos. Sure enough, it's not always black and white, and decentralization is definitely a spectrum. Its boundaries are constantly being stretched and redefined. Finally, though, despite my rough take on the Avalanche protocol, my respect goes out to the smart researchers on both the Hedera and Avalanche teams, different blockchains for different purposes and use cases. That being said, obviously, Hedera in its current state and even future states will continue to be highly trusted, highly secure, rapid and scalable with those fixed fees, and that is what makes it a fantastic utilitarian blockchain for many different projects. As I covered in previous videos, we've also got HIP proposals to provide services like pseudo-random number generation, which could be used by absolutely any sort of project that is involving obfuscation of data, etc. Tons of different use cases there. Talking more about Avery Dennison, covered this again in yesterday's video with @𝗟𝗏.io. I just wanted to put across that sheer scale of what this will bring to Hedera. So need more info about Avery Dennison, Hedera and the Hbar Foundation with the @𝗟𝗏.io. The biggest single use case ever deployed on a public DLT and the start of enterprise adoption. And we've got the Hbar Foundation weighing in saying this is obviously true. If I play this video from the beginning, we can see here @𝗟𝗏.io, Hedera and the Hbar Foundation, Avery Dennison's @𝗟𝗏.io connected product cloud to utilize the Hedera network to account for carbon emissions of billions of unique items. Billions of unique items. Single biggest ever use case deployed on a public DLT, and it's on Hedera. No surprises should be made there as well. @𝗟𝗏.io is way bigger than you think. Look at a few of the ecosystem partners supporting this platform. They include Suku World, Microsoft, MasterCard, and more. @𝗟𝗏 is already tracking 22 billion devices and is integrating with Hedera. Game changing, of course. We can see from this image here, 300 new items added per second connected to @𝗟𝗏.io, 22 billion physical items managed via @𝗟𝗏. 6 of 20 top apparel brands use @𝗟𝗏 already. 4 of 10 of the top quick service restaurants, QSRs, use @𝗟𝗏.io. So this is a massive, massive use case integration into the Hedera DLT, and this will seriously bring massive volume along with it. And as we've mentioned in previous videos, volume is tied significantly or substantially to Hbar's price, which we should see increase over the long term. This article here goes into some more depth about what they effectively provide, but I just kind of wanted to talk about this last sort of or third to last paragraph. In this year since our launch of @𝗟𝗏.io, we've seen strong adoption by brands across numerous industries, from apparel to food, beauty, retail, pharmaceuticals, and more. They all need end-to-end supply chain traceability, carbon accounting and carbon reduction capabilities to allow them to deliver on their net zero carbon goals and give their customers the product transparency they demand. This is from Max Winograd. Vice President of the Connected Products at Avery Dennison's Smart Track and co-founder of @More.io. We're obviously excited to start pushing billions of item-level data transactions through Hedera Network to deepen the connection between physical and digital worlds and enable our customers to continue leading in sustainability and traceability. So you've literally read it there firsthand. We are excited to start pushing billions of item-level data transactions through Hedera. So it's almost confirmed here that over the coming weeks and months, we're going to start seeing a massive explosion of the transactions per second, per day, per week, per month over on the Hedera network as these integrations come to fruition and we start seeing high-level use cases that are being rolled out globally. This is the real beginning of enterprise adoption for Hedera, and it's not something that should be taken lightly or understated, and is one of the firm reasons I truly believe in Hashgraph itself. That being said, I hopefully you enjoyed this video, slightly longer than usual, bit chop and changey with lots of different information across the board. However, it's important to keep up to date with what's going on within these markets as they are incredibly volatile as previously stated. If you enjoyed this video, drop a like, leave a comment as I do try and reply to as many of them as I can. Make sure you subscribe for future videos, tons of stuff coming to Hedera soon. Anyway guys, cheers for watching.